My name is Ricky Beal. I'm one of the principals and founders of Heidel Beal and Associates. Recently, I was at a party with lots of friends and got into this conversation with a gentleman who was asking me lots of questions about what I do and how we serve our clients. And he was asking me what stocks he should buy and what kind of investments are good to buy right now as the market continues to go up higher. And I couldn't help but think of a very important message that I wanted to share with all of you. And it's a message that's quite simple, but it's a message that talks about how emotions play a critical role in our decision making and how our emotions can dictate what we do with our money. And so one of the things that I think about in that conversation was that most people think about buying more or adding more to their stock portfolio or to their risky investments when those investments are doing very well or maybe at all-time highs like the current market is. And so it's important to remember that when the markets are sailing as high as they have been for the last 12 to 36 months, it's critical for us to think about other strategies that we could be using those profits or using that capital with. And so we always want to think about diversification. And as the old adage goes, we want to buy low and sell high. And right now, it does feel like we're at a high in many aspects of the market, from the S&P to the Dow Jones, and lots of things are doing well. On the flip side, it also brings me up to 2008. And for us here at Heidel Beal, reminds me of what we experienced in 2011. We had a low in certain investments, whether it be gold or treasury bonds. And back in 2008, the stock market had crashed. At that time, when assets were priced extremely low, we had several conversations, with clients and prospective clients that were, very emotional. And people were asking us, what do I do with my portfolio? What should I do? The stock market is down. I want to sell. I want to move to cash. And so they were very fearful about what was going on in the markets and the economy, and they were looking for guidance. That's actually a time that we want to buy. I know it's counterintuitive to our emotions and our psychology sometimes, but that's a great time to buy. And so before we experience something like that again, we always have to play it safe. And we learn from our past mistakes, or we learn from what the market teaches us. And that's to continue to be active, to diversify, to move money that are from investments that are doing well to maybe some other investments that are uncommon and not talked about. At the same time, when markets are low, we want to add more to investments that we feel can have a good long-term return and add that alpha, as people like to say in our industry, to the portfolio. So diversification is critical at this point. And if you're thinking about investing or have cash on the sidelines, or you may have a highly concentrated stock position, this is a good time to diversify. Assets are high, emotions are high, stock market's doing well. It's a great time to look at some other options. And if you need help with that, we're here. So feel free to give us a call or send us an email or go to our website at www.hbawealth.com.